Good morning, everyone, and thank you for joining us today for this monthly edition of our national webinar. My name is Munzer Gaucher with the Entrust Group. I'll be your presenter for today's webinar titled The Missing Piece, Planning Your Retirement Can Benefit Your Business. We'll be exploring the different types of retirement plans available out there for small business owners. Specifically, the three most popular ones, Simplified Employee Pension Plan, better known as the SEP IRA, the Savings Incentive Match Plan, which is the Simple IRA, and also the Individual or Solo K. Each of these plans have different characteristics, such as the ability to cover employees and contribution limits and others. We hope that after this webinar, you'll have a better understanding of which plan is the right one for your business. Obviously, as with everything else, please consult with your tax advisor. I'm sure that you'll have some questions for me, so please go ahead and type those questions at the bottom right-hand side there of the chat corner, and we'll try to get to them, many of them, at the end of the presentation. So before we get started, there is a disclaimer that I'd like to read out loud to you, please. The Entrust Group, Entrust does not provide investment advice or endorse any products. All the information and materials are for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. So a little bit about the Entrust Group. For those of you who are not familiar with the Entrust Group, what our role is and what we do, we are the nation's oldest and largest, one of the nation's oldest and largest administrators of self-directed retirement plans. We work with individuals and small business owners who wish to invest their retirement plans in alternative investments such as real estate, private placements, notes, and many others, non-traditional investments. The Entrust Group is unique in that we don't give any advice, whether it's legal, tax, or investment advice, and we don't sell any products. We've been in business for over 30 plus years, and as you can see, we process many transactions for our clients on a monthly basis. We manage about $2.2 billion of investor assets. We're also the leaders in our industry when it comes to education, offering national CE continuing education programs for professionals such as realtors, CPAs, and attorneys, as well as holding many national and local in-person events and webinars such as the one you're on today. We differentiate ourselves from the competition by having local offices nationwide, staffed with knowledgeable individuals, which allow our clients the ability to interact and put a face to a name, and provides them with superior customer service and faster transactions time, which they are used to, and it's actually pivotal in our industry here. So a little bit about our agenda, what we're going to be covering today. We'll go ahead and define self-direction for you, tell you what it is, talk about the different investment options that are available for you within a self-directed retirement plan, jump into the benefits of self-direction for small business owners, talk about the three types, kind of the most popular types of tax advantage retirement plans for small businesses that are out there, do a bit of a comparison, benefits and comparison of each plan for the business owners out there, give some examples, what you may contribute for each SEP, Simple, and Individual K, and then go through a case study of investing in real estate using an individual 401k plan and buying it all cash through a direct purchase. And hopefully we'll have some time out there to address your questions through our Q&A session here. So let's get started here by talking a little bit about self-direction, definition of it. A retirement account, again, in which an individual investor is in charge of making all of their investment decisions. So how many of you, out there have heard, I'm sure a lot have heard the term self-direction or SDIRAs. That's what it is. It's really a term used in the industry for a retirement account that allows you to invest in non-traditional alternative investments. It's not a type of IRA, just a term for a retirement account in which you, the individual investor, is in charge of making all investment decisions. So it's not a type of IRA, it's just a term used in the industry. So a self-directed IRA provides you with the greater opportunity to diversify your retirement plan, outside of what you're used to, the traditional stocks, bonds, CDs, mutual funds, and allows you to invest in non-traditional investments, assets such as real estate, notes, precious metals, and many more that we'll be discussing shortly. And of course, all of these non-traditional investments are held in an account administered by a custodian or a trustee, or in this case, an administrator such as the Entrust Group. So what can I invest in? If I have a self-directed retirement plan, what are the opportunities available for me in terms of investment options? And really the answer to that is it's limitless. What do individuals invest in, with the exception of a number of asset classes, a few, 3 or 4, such as antiques, collectibles, S-corps, and life insurance products? You can invest in almost anything else. The 4 asset classes that I just mentioned, the IRS deems them as a disallowable investment, so your IRA may not invest in it. Anything else, by default, your self-directed IRA may invest in. But by far the most popular asset purchased through a self-directed IRA that we see is real estate. And it's in different forms, whether you're looking to invest in a residential real estate, commercial, raw land, offshore, all these types you may invest in. But obviously the restrictions apply in that it has to be an investment only. It's an arm's length, no self-dealing transaction. Can't live at the property, you may not vacation at it, you may not render any services to it. So basically you're buying this property from a third party, renting it to a third party, and then eventually selling it, and the proceeds go back into your IRA, tax deferred or tax free. That's what you can do with a self-directed IRA. Other popular investments, for instance, that we see our clients invest in could include precious metals, private placements, limited partnerships, LLCs, promissory notes, whether they're unsecured or maybe secured by real estate, such as in the form of trust deeds, and really almost anything, as we mentioned. So this is just a small list of investments that one can do with a self-directed retirement plan. You have far more flexibility in the number of investment choices that you have. And more importantly, you are not limited by the parameters set up by your traditional custodians out there, the financial institutions or the banks out there, that they offer the traditional assets that they have, whether they're stocks, bonds, mutual funds, or etc. So what are the benefits of self-direction for small business owners? I believe as a small business owner, again, it's important to plan for your future today. And I think setting up a retirement plan won't just benefit you, the business owner. It can also help you attract top talent to your business and retain those quality employees. There's a retirement plan for you whether you're managing multiple employees or you're just a sole proprietor. But by far the biggest benefit is the tax savings. It provides you with significant tax benefits and advantages associated with retirement accounts for business owners. And this is an incentive to encourage you, the business owners, to contribute to your retirement plans. It allows you to take control with freedom, again, of a self-directed retirement plan, as we talked about, investing in what you know and understand. Be able to invest in, let's say, for instance, you're a real estate professional or a realtor out there, and you're a real estate expert, and that's what you've invested outside of your market, outside of your retirement plan. So, and you're successful doing that. So maybe if you're with a self-directed IRA, you're able to invest in real estate, and by all means, be successful doing that as well. And again, truly diversify your retirement portfolio to protect you against the market volatility and inflation. And again, invest in what you know and understand. That's the most important thing here. So let's kind of take a look at the types of small business retirement plans that are available for you. And again, those are what we see are the three most popular ones that are out there available to business owners. We'll take a look at each one, what their benefits are, characteristics, and so on. Obviously, the first one is the Simplified Employee Pension Plan, better known as the SEP. Going forward, the webinar just determined as the SEP, and the other one is the Savings Incentive Match Plan for Employees, better known as SIMPLE, and then the individual 401k. So let's take a look first at the SEP IRA, what are the benefits of it. And really what a Simplified Employee Pension Plan, a SEP IRA, is an employer-based IRA. That's what it is. It's basically a traditional IRA, a glorified traditional IRA, if you will, for business owners that are allowing you to contribute 25% of your earned income up to $53,000. So obviously it allows you to contribute a bit more than your typical traditional IRA, which is $5,500 or $6,500 over 50. It's very popular among small business owners. I think due to the fact that it's very simple to set up and it's fairly inexpensive. A SEP plan, again, allows employers to set up SEP IRAs for themselves, and for each of their eligible employees, they'll set up basically a traditional IRA that they can make their contributions to. Any employee who have reached the age of 21 years and have worked 3 of the last 5 years and have received at least, I think, $550 in compensation in the previous year is eligible. Now, those eligibilities, an employer may just decide to waive those and have anyone that's employed by them, works for them, eligible for a SEP IRA. Now, contributions to a SEP IRA are discretionary. What that means is you don't have to make them every year. But if you do contribute, let's say, to your SEP IRA, then all employees that are eligible, or in the case that you waive the eligibility, they must receive the same percentage. So if you decide to maximize and contribute to your IRA SEP IRA 25%, then you must contribute 25%, not the same amount, the same percentage to each and every eligible employee. Contribute up to 25% again of the earned income for employee, and it's capped at $53,000 per year. Plans may be established until the employer's tax return due date plus extensions, which is typically October 15th. And again, SEP IRAs are available to any size of business, and they have low startup and operating costs, which makes them very attractive to most business owners. The second, so let's take a look at the other, what we call an employer-based IRA available to you as a business owner. Again, the Savings Incentive Match Plan, better known as a SIMPLE IRA. A SIMPLE IRA plan is a savings option for employers with 100 or fewer employees. If you have over that size of employees, you're not eligible to set up a SIMPLE IRA. Any employee who have earned $5,000 in the previous year is eligible to be part of it. There are 2 types of contributions that may be made to the plan. One is the employer. They must make contributions either 2% non-matching or up to 3%, making dollar per dollar of employees' contributions. So their matching contributions are only made on behalf of participants who defer into the plan. Okay? Or the second type is the employee can contribute up to 100% of their compensation not to exceed a dollar amount, typically $12,500 for this year. Now, the deferrals are deducted from the employee's wages, and it's deductible to the employer, which actually becomes an incentive for the employer to set it up. Employer contributions are capped, and again, unlike the individual 401k, employers may have employees only up to 100. If you have over that, you may not be able to set one up. The third type of plans that we see business owners set up is individual K plan, better known as a solo K. An individual 401k is similar to your traditional 401k, but it's only designed specifically for businesses that employ only the owner, spouses, and partners, and so no employees. So it's ideal for a sole proprietor with no employees other than the spouse, partner. If you have that, then you're eligible to set up the individual K. The individual K has two components based on your role as both the employer and the employee. So you can act as one as the employer and as the employee. The employee's salary deferral is up to 100% of the compensation, up to annual limits of $53,000, and it's based on the earned income. The employer portion, which is the profit sharing contribution, can be up to 25% of the compensation up to an annual limit. There's a maximum compensation to be used, and in 2015, it's $265,000. Now, another benefit for an individual K is the ability to take loans up to 50% of the account balance with a maximum loan size of $50,000, provided the funds are repaid within a 5-year period and at a reasonable interest rate. So that component in itself is a very, very attractive feature for many business owners that wish to, it's an option for them. If they decide to take a loan out of their individual K, they may do so. Obviously, in a case of a SEP or a simple IRA, you're not able to take a loan out. So that's a very important feature out there. So this slide here kind of shows us the characteristics and contributions of the employer-based plans that we have out there, that you have as a business owner available for you, the SEP and the simple. Let's kind of walk you through the separate characteristics and contributions and so on. So in the case of a SEP, again, employer contributions are discretionary and they're tax deductible to the employer. Again, so the employer doesn't have to make a contribution every year, but if they do, the same percentage has to be made for each and every eligible employee. In the case of a simple, the main characteristic is no more than 100 employees. You have elective employee salary deferral and employer matching. Contributions for SEPs, it's the 25% of your adjusted gross income of earned income up to $53,000. In the case of a simple, it's a required employer match up to 3% or non-elective contribution of 2% of compensation. In the case of a SEP IRA, the employee cannot make contributions, only the employer. In the case of a simple IRA, as we discussed, you can defer up to 100% of your contribution of your earned income up to $12,500. There is no catch-up over 50 for the SEP. However, you're allowed an additional $3,000, so it's $15,500 if you are over 50 and you're eligible for deferral for a simple IRA. So again, which is a better employer-based IRA plan for your business is obviously, again, a question that you would need to pose to your CPA. But it will generally, I think, depend on the number of employees you have, among other factors. If you look at it, the main key advantage to a SEP IRA, in my opinion, is that it's easy to set up, very low maintenance costs and to maintain, while the simple IRA main advantage is the salary reduction plan with little administrative paperwork, unlike a profit sharing plan, for instance. So here's a quick also snapshot of the features and highlights of an individual 401k. So if we can go through it here real quick, the main characteristics of it, it's designed again for ideal for sole proprietors, owners only plan. You can't have any employees. If you have one or more employees, then it becomes your traditional 401k plan, if you will. You have the same benefits of a 401k, but not subject to non-discrimination test and anti-alienation against creditors. Plan can only cover owners and businesses, as we discussed. One of the highlights of it is you can take personal loans from your own account. So it's something that you're not able to do whether you have a SEP IRA or a simple IRA, tax deductible contributions, and the contribution flexibility, and so on. Contributions for 2015 is the less than 25% compensation, or $53,000 is the maximum contribution on the employer part. On the employee component part, it's up to $18,000, and then you do have a catch-up of $6,000 again if you are over 50. So let's take a look at a couple of examples of the contributions that are available to you if you have set up, a SEP plan, and we'll talk about a simple and then an individual K plan. So in the case of a SEP plan here, Matt has a business and he earns $265,000 of income for the year. So Matt has an employee, Eric, who earns $50,000 for the year. Employer may waive the eligibility requirement, and Matt, the business owner, has decided to do so. So again, the SEP contributions are discretionary, and the business owner may elect the percentages, but it has to be uniform. So in this case, Matt can only contribute $53,000. 25% of $265,000 is more than $53,000. So the maximum amount he can contribute is that as well. Eric, in the case of Eric, he can contribute up to $25,000 for Eric, which is $12,500. Here's an example of a simple plan and what you may contribute to it. So Matt has a business and earns $265,000 of income for the year. He is under the age of 50. Matt has employees, Eric, who earns $50,000 for the year, and Josephine, who earns $62,000 for the year. The business was established as a simple plan by March 29th, so it's eligible. Eligibility requirements are waived for the plan, and the business chooses to make the matching contributions up to 3%. So how much is each employee eligible for? In the case of Matt, he puts in his employee deferral maximum contribution of $12,500. The employer is matching 3% of that, which is $7,800, for a maximum contribution of $20,300. In the case of Eric, again, Eric chooses to put away the maximum contribution, which is $12,500. The employer is matching that with 3% of $1,500, and which makes it a maximum contribution of $14,000. Josephine, in the case of Josephine, she's just decided to defer $5,000, even though she's eligible to defer $12,500. The employer is matching 3% of that to a maximum contribution of $6,860. So here's an example of the individual 401k plan. In this case, Matt has a business, earns $100,000 of income for the year. Matt is under the age of 50. He has no employees, so therefore he is eligible for obviously the solo or individual 401k. Assuming the plan allows for after-tax contributions, some plans out there do that. What is the maximum individual 401k contribution for Matt? So again, the deferral, he's maximizing that. He can put away up to $18,000. The profit sharing, in the profit sharing case, he can put away 25% of that, which he is, 25,000. And then to make up for the maximum contribution of 53,000, he's electing for the after-tax of $10,000 to get it up to $53,000. So as you can see, in some cases, the individual K plan allows you to maximize your contributions more than the other plans. And again, depending on it's a case-by-case basis here. So in summary, again, as a business owner, I think it's important to plan for your future today, again, as we mentioned. I think setting up the right retirement plan will just do that for you. In addition to you rewarding your employees by providing a way for them to grow their tax-deferred dollars, a way for them to put away retirement dollars. Now, which plan is best for you, again, is obviously a question you would need to ask and discuss with your CPA. But here, I think, are some considerations for you when comparing the different types of plans that we briefly discussed here that are available to you as a business owner. So let's take one by one, for example. I think, for example, for a SEP IRA, those are the questions you want to ask yourself. Are you an independent contractor? Are you self-employed? Do you want to make contributions for yourself as well as employees if you have some? Do you want the flexibility to change contributions and make them discretionary every year? Because not every plan allows that. Are you looking for low administrative costs? You don't want to pay a lot of maintenance costs. Do you want to invest in a wide range of investment choices? If the answer is yes to most of those, then I think a SEP, self-directed IRA, may be a good choice for you. In the case of a simple IRA, are you a small business owner, for instance, looking for retirement savings options? Are you looking for a low-cost plan? Are you looking, for instance, for a plan that covers both you and your employees? Are you looking for a plan that can help you attract quality employees while reducing your business taxes? Are you looking for flexibility in how much to contribute to employee plans? If the answers are yes to most of those, then maybe a simple IRA is the plan for you. As for individual K, that could be a right plan for you, obviously, if you're a sole proprietor, no employees, if you're just you, spouse, and a partner. Because again, keep in mind, if you have one or more employees, then you'll have to set up your traditional 401k, if you will. Are you looking for the largest potential contribution? That could be something that an individual K may provide to you. And also, are you looking for the capability to borrow from the plan? Again, the other employer-based plans that we discussed, the SEP and the Simple, does not have this feature. This is a feature that you may have in an individual K. You can borrow up to 50% of what you have in there, up to $50,000. You don't have to use it, but it's a feature. So if those are the things you're looking for, maybe an individual K is a better plan for you. And again, whichever plan is best for you, this is something you want to discuss with your CPA and see which one is better for you and for your business. So very quickly here, I'm going to go through a quick case study before we open it up for some Q&As. And this case study is investing in real estate with an individual 401k plan. And again, you can invest with any type of plan, whether it's a SEP, Simple, even a traditional Roth, any kind of plan you can invest. You can self-direct it and invest in real estate and any other types of non-traditional assets in there. But let's take a look at a case here where you have an individual 401k and you're buying the property direct purchase. It's an all-cash purchase. So how to invest in real estate with an individual 401k plan? Well, the first and foremost thing you want to do is obviously you identify the property you would like your retirement plan to purchase. Whether you do it yourself or by using an agent, you've identified the property. The next thing is you make an offer. Now the difference is here between you purchasing the property and the plan is you make the offer in the name of the plan, because the plan is who's purchasing the asset, in this case the property, not yourself. And the purchase contract also must be in the name of your plan. Now when the offer is accepted, obviously escrow is opened, Then escrow is funded by the plan trustee via purchase instructions from the plan participant, in this case by completing our bi-directional letter, we call it. The trustee through Entrust follows the directions of the bi-directional letter and works with escrow and title company. Trustee then through Entrust advances the funds to escrow per instructions on the bi-directional letter. You and the participant, as a participant and the trustee, then must read and approve all the documents. The closing documents must reflect beneficial interest holder for the benefit of the plan. For example, in this case, ABC Company Profit Sharing Plan, FPO for the benefit of Mary Jones, participant, John Jones, trustee. That's how title is held. So funds amount is wired by the trustee to escrow. Property becomes an asset in the plan when closing has occurred. It's really that simple. So again, getting started, if you're interested in setting up a self-directed IRA, whether it is simple, a SEP IRA, whether it is an individual K, or your traditional Roth IRA, it's really 3 easy steps. You contact one of our local offices, you complete some paperwork, you open up an Entrust account within 24 hours. Second step would be to fund your account. And really funding your account is either one of 3. You make yearly contributions to your self-directed IRA or individual K plan. You transfer from another existing IRA that you have, or you roll over from a previous 401k plan. At that point, your Entrust account is open and funded. Then you go out there, you're ready to purchase your asset. Let's say in the case of real estate, you've identified the property, and you go through the steps that we just discussed in how to purchase the investment. So that in a nutshell is our presentation today about the different types of business plans that are, or retirement plans that are available for you as a business owner. I see we have quite a few questions here, so I'm going to try to get to those as much as I can. So let's see here. We start from the beginning. There's a lot of questions here. Okay. Okay, questions. Right. So I work, Joseph Moore asks, I work with a company and I have a 401k with this company. I contribute 12% of my salary. I want to open an additional IRA. Is this allowed? The short answer is yes. If your question is you just want to set up an additional traditional or Roth IRA to make your maximum contributions of $5,500 if you're under 50 or $6,500 if you're over 50, the answer is you may. Whether if it's a traditional IRA, whether it's deductible or not, obviously that's going to depend on you making contributions to your 401k. In all likelihood, it's not. But if your question is, are you able to because again, there's only a maximum contributions you can make to a traditional or a Roth IRA, which is again $5,500 or $6,500. But if you're looking to roll over the 401k that you have with your company, chances are you're not able to do that, Mr. Moore, until you separate from employment. That's a question you want to ask your administrator at your 401k at your company and find out, but chances are you're only able to roll that over when you separate from employment. S. Taylor has a question. Solo 401k, let me see. Christopher Robinson has, on the individual plan, the after-tax contribution, is that portion taxes like a Roth IRA? There is a Roth component in the individual K, and not all plans have it. The Entrust Group plan does. Feel free to call our offices for more information or also consult with your CPA, but there is a Roth component in most individual K plans. Roy comes, I'm over 50 for all of these three questions. Can a person have more than one self-directed IRA plan? You can. You can have as many IRAs as you want, but you can only make maximum contributions are based on the individual, not on the IRA. Must a self-directed investment retirement plan be managed by a third-party administrator, or can the trustee manage? Typically, it's us. There has to be a third-party administrator, and that's where we come in, or by a trustee or by a custodian. I'm an equity partner in a CA LLP. Can I establish my own self-directed 401k separate from the partnership? Talk to your CPA about that one. You may. Although my primary income comes from my partnership activities, can I also be an owner of a separate business C Corp and have separate self-directed retirement plans? Questions for your CPA, please. Okay. Vincent has, what if I have a self-directed LLC? Again, that's another topic, Vincent, but basically a self-directed LLC is, again, it's an IRA it's an LLC that's owned by the IRA. That's basically essentially what it is. So what you could do is you can set up the LLC, have your IRA buy the membership interest of this LLC, and then conduct your transactions through the LLC. But obviously anything that is disallowed or prohibited in the case of an IRA is also prohibited or disallowed if you in an IRA-owned LLC. A couple more questions here. Can a company set up both a solo 401k and either a SEP or a simple plan? Or you can only set up one for a company. So it's either you decide which one is better for you, a solo 401k or a SEP or a simple IRA. But obviously, we're happy to set up any one of those for you, but which one is better for you is something that you want to consult with your CPA, please. Robert Newstead, what are the upfront and ongoing costs for various plans? We're happy to discuss with those for you in detail if you call my offices, but it's essentially for the IRAs, there's a $50 setup fee. Anytime we fund an investment, it's a $95 funding fee. And typically we have a per asset per year fee of $299, so $300. On an individual case, it's the same, but you add on $300 per year for the plan documents. Robert, please call me with my information on the last slide there. I'm happy to discuss that in further detail for you. Ben has a question. I joined late. Can I borrow against my existing self-directed IRA to pay for my children's college education? No, unfortunately, you may not borrow against the existing your IRA, period, whether it's any type of IRA. There is a loan feature available in the individual 401k that allows you to, again, borrow against it up to $50,000, up to 50% of what you have in there. Okay. Charles had a question. I own real estate in partnership with my SEP IRA. How are distributions made? That's a good question, Charles. Basically, you've basically invested in this real estate partnership through your IRA. So the subscriber or the partner, if you will, is the IRA. So all the distributions proceeds are made into the IRA. So your real estate partner would write the checks to your, for instance, if it's an entrust, to the entrust group for the benefit of your full name and IRA, and the income or proceeds will go back into your IRA tax deferred or tax free, depending on what type of IRA you have. If you wish to take that as a distribution and you are over the age of 59.5, in the sense that it's a normal distribution, then obviously then the check will still have to come into your IRA account, and then you would instruct us to make the distribution to you. Well, those were great questions. I think I have a couple more. Let me see if I can. Actually, the others were just questions to our organizer. So again, to recap here, my information is right there. Please feel free to call me at 310-496-4216 if you have any other questions. Or please feel free to email me. My email address is mgaucher@theentrustgroup.com. If you live in the LA area, I'll be happy to meet with you in person to address any of your self-directed IRA needs. I look forward to speaking with you soon, and thank you so much again for attending our webinar today. Have a great day.